Hey, good day, everyone. These are the mortgage rates for June 6th, 2022, brought to you by United Real Estate Capital. I'd like you to hang in there, even if you can't hang in for the entire video. Give me Give me 3 minutes and 50 sec. No, give me 4 minutes, okay? If you can't stay the entire video, just give me 4 minutes, and I promise you, the 4 minutes of my advice is going to save you money on your next purchase or refinance. So let's jump right into it so we can get you going. All right, so here we have the 30-year, some 30-year fixed options here. I always present more than one interest rate because you need to know that there's options available that you can fine tune the best fit your situation. All right, the rate and APR are the same. That indicates there's no lender's fees or discount points associated with this option. A great short-term option. You're going to be living there 1 to 3 years or so, or you just don't know what you're going to be doing. You have no plans. Now this one here, the APR is higher than the rate. That indicates fees associated with the rate. In this case, I list how many. No lender's fees, but about $9,600 in discount points. Oh my gosh, is that horrible? Well, maybe not. It all depends on how long you're going to be staying in there. The difference between this 3.9 rate and this 4.7 rate is about $3,000 a year in interest. This rate saves $3,000 more per year than this one. It's actually about $2,900, but let's just round it to $3,000. So at 3 years, the savings have just about paid for this $9,600 in discount points. And after that, it's $3,000 a year in your pocket extra. Also, check this out. About a $90 difference in payment. That's $90 that could go to anything like gasoline. Well, at these prices, I guess that'll pay for about, 5 miles? All right. How are we sitting at overall? Well, I always put these pricing indicators here. We are up, unfortunately, from last week. In dollars and cents, we're up about $2,600. Yeah, I know that's a big hit. So if you're going to be tracking these to try to figure out when you're going to do something, let me give you my advice on tracking. I advise booking a brokerage. Well, we're a brokerage, so obviously I'm going to recommend bookmark this site or subscribe to this channel. And maybe your bank or credit union you bank with, bookmark them. And then maybe one of the big box lenders like a Quicken or a Loan Depot, bookmark them and check them weekly. Obviously, it needs to be an institution like us. We list our interest rates out in the open. There are a lot of companies that they want to act like slicky boys and they don't list their rates. They want you to get on the phone with one of their salespeople so they can sell you on how wonderful they are first. But go with the company that's going to list their rates. So that checking them out every day, I'm telling you, that is the best way to go. That will give you a great idea of what's happening in the primary mortgage market. Now, that might be contrary to what advice some other folks might give with different level of experience. I'll teach you like, oh, hey, you want to look at the 10-year treasury or check out mortgage-backed securities. All right, that's cool. I do check those every day, have been for 23 years or so. But you need something that's going to help you predict. You're doing that, I should say, to help you predict where mortgage rates are going to go. And I just don't think that's going to work. Trying to check out a couple indicators like that in anticipation of figuring out how lenders are going to price their rates, it ain't gonna happen. I don't mean to sound negative, but it's basically just gonna tell you where you're at, where pricing is at right now. It's kind of analogous to being in traffic, stop and go traffic in California. You're sitting there bumper to bumper, inching along on the 101. You whip out your cell phone or you turn on the KNX on the radio and you listen to the traffic report and they say, hey, it's going to be bumper to bumper until this exit. Well, that's great that you know, but it doesn't help you get out of the traffic. You're still stuck in traffic. And that's how it is, checking out the Treasury and mortgage-backed securities. It's not going to help you be the mortgage rate oracle of Omaha. It's just going to reinforce what's happening right now. So my approach is learn how to work with what you have. Learn how to work with what you have and get the best price by tracking the lenders weekly. And what I mean by learning how to work with what you have, learn how you can save the most money by selecting the right interest rate, like this one, or the right term, or the right type of loan. Learning how to figure out which loan is going to work best for your scenario is something that a skilled, experienced mortgage loan originator like myself can help you with. If you can't figure it out, learn how to work with what you have instead of trying to predict where lenders are going to price, because that's what it boils down to at the end of the day. Where are the lenders and brokerages and banks going to price their mortgage rates at? I'm actually cover that in detail on another video. Thanks for hanging in there. Subscribe. Reach out to me with questions. You can even put questions in the comments if you want to. If you don't want to email, but you can email, you can call. I love wargaming. I love if you have scenarios and you want some ideas on it. Wargaming is one of the best things I do. So reach out to me via email, call. You can call this number up here. I'll put links in the description, and we'll work together to help save you some money. All right, thanks a lot. I'll chat with you on the next one and save some money today.